Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest in capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. A couple of announcements. Tomorrow I have a fishing trip planned. It looks like it's going to rain, so if it rains I probably won't go and you can expect normal content from me. If, however, I do decide to go fishing despite the rain tomorrow, or if by some miracle it does not rain, then I will probably have, I think I've got a video somewhere that has been seen by the members already, so I'll set that to upload tomorrow so you have something to watch at least. And the other thing is, if you want to go and watch the podcast I was on yesterday on CPM's channel, I will put a link at the end of this video. I'll put a big clickable link so you can click that and hop over there and see the podcast with me, CPM, and the mighty Cobra Stacker. Other than that, as I said, welcome to the week, welcome to Monday. I think the way we want to kick off this week is with a little bit of Monday morning DMT. So this, of course, is the dollar milkshake theory. And the reason I want to go over this is because a lot of people seem confused. I keep saying that the dollar can indeed run higher with risk, with gold, with Bitcoin, etc. And a lot of people are very confused by this. A lot of people keep saying to me, how on earth can you be calling for higher Bitcoin with a dollar running as well? And so, yeah, I completely understand, right? Typically what we do see is an inverse relationship between the dollar and risk, between the dollar and gold, between the dollar and Bitcoin, meaning when the dollar is in a decline, we typically expect these other assets to be in an advance. And this is simple because people are getting rid of dollars and using them to take on risk. They are, typically speaking, using those dollars to buy gold, to buy Bitcoin. And also we get this idea that a weakening dollar forces people to look for yield, to look for a way of preserving their purchasing power by buying things like the stocks, like gold, like Bitcoin. But remember, we are currently in the middle of very, very wild times, and wild times call for DMT. So, like I said, I'm going to go over this dollar milkshake theory, and then what I'm going to show you is a technical setup that proves the Dixie and risk can run together. And in fact, the technical setup I'm going to show you, I believe, is very, very similar to what we have today. So, DMT, the dollar milkshake theory. This is an analogy used to describe a milkshake of liquidity with the dollar as the key ingredient. The dollar is the world reserve and the foundation of the global economy. So a rapidly rising dollar has huge impacts on the rest of the world. People think that just because they keep printing dollars, that it can only go down. And whilst that might be true in the long term, the dollar will lose purchasing power over time relative to its purchasing power today. In reality, the printing of dollars actually forces other countries to print their own currencies in similar amounts to ensure that trade, import and export costs and servicing their debt doesn't get out of control. So this essentially means the USA can export its inflation to the rest of the world because it has that world reserve status. Now, in theory, if all nations are inflating at similar rates, shouldn't it all even out, right? Well, this is entirely wrong, and this all comes down to one key difference: demand. So because the USA has the world reserve status, it also has huge demand underneath the dollar. Everything is settled in dollars. Oil, gas, energy, gold, commodities, they're all settled in dollars. And this keeps a permanent demand underneath the dollar. And the most important point to note here is that demand is simply not there for the other rapidly inflating currencies. Some examples here for you is that Asia and Europe settle their soybeans in dollars with Brazil. The Saudis settle nearly all of their oil in dollars. Europe and Asia do very, very little amount of non-dollar trade for oil. China and Japan use dollars to settle things like copper with Australia. So everybody needs dollars, even if they don't want them. And they also, of course, need these dollars to service their dollar-denominated debt held by the corporations and governments outside of the USA. So, of course, this explains why many countries like China and the BRICS, etc., are trying to move off of the dollar. They want to decrease that dollar demand and thus take away some of the power that the USA has to export its inflation to other countries. But that does take a lot of time. And of course, the USA is going to fight tooth and nail to defend that. Meanwhile, of course, the USA is more than happy with holding all of the power and control of the currency and global trade. Now, the real risk comes when global economies slow down or the USA economic growth outpaces the rest of the world. This is because when the economic activity in the USA is outpacing that of the rest of the world, it sucks up dollars, decreasing the supply for the rest of the world to use. But of course, they still need those dollars to settle their trade and their dollar-denominated debt. The increase in demand in dollar actually forces the price of the dollar higher relative to the other currencies, and it makes it much tougher for all the other countries to service their debt and conduct international trade. And this is where the milkshake analogy comes in. As the dollar moves higher due to relatively higher demand, it slurps up all the other currencies, which are forced to print even more of their own currency to then convert to dollars so that it can be used to pay for goods and services and, of course, service their dollar debt. This, of course, means the dollar just keeps on rising because many countries will be forced to devalue their own currencies by printing more of them, which then causes the dollar to rise again, adding to the strain on the global system. So what's worse is this makes the dollar look like an attractive safe haven. Because, of course, the dollar keeps rising relative to these other currencies, so the USA ends up sucking up all the capital from the rest of the world, and the dollar again rises. So if this keeps up, soon you're going to have a global sovereign bond and currency crisis, and this, of course, drives even more capital into the dollar for safety, which completely undermines global markets. And like it or not, there is literally nowhere else to hide. You want the GBP? No. The euro? The JPY? No. As all of these are going to be dying against the dollar. And so this is dollar milkshake theory. The dollar milkshake theory says that the dollar will slurp up all of the other currencies in the world. It creates this vortex at the base of the straw in which all other fiat currencies are sucked into as they are forced to rapidly devalue their currency without, however, that key difference of having the demand and the requirement for their own currencies. Of course, the dollar is the one that has the world reserve status. The dollar is the one that therefore benefits from having a constant bid and a constant demand underneath it. And so this whole thing is a bit of a trick of the mind. It's a bit of a smoke and mirrors show. We watch a dollar rising thinking the dollar is getting stronger when actually it is simply the strongest dying cow in a sick herd of dying cows. And so I believe this is what we're seeing. I believe the reason we're getting a dollar bid is not because the dollar is actually strong. I believe what we're seeing is the dollar slurping up all these other fiat currencies. I believe these other fiat currencies are dying a death of 1,000 cuts because they do not have the demand internationally underneath them like the dollar does. And so if I pull up a chart here, I've said this over and over and over again. This is the DXY. Remember the dollar in a basket relative to some other currencies. What I've been saying I would love to see more than anything is the dollar nosedive off a cliff. I've been saying this over and over again. I would love to see that. But we can't even entertain a bearish scenario until we at least lose this upward sloping blue support line. And if indeed we do have DMT in play, then I don't see any reason why this continuation to the upside for the DXY can't occur. Again, I would love to see this, but there is significant work to do. Major breakdowns need to occur first before we can even entertain that as a possibility. And as I always say, charts are the truth, charts do not lie. This is a clear breakout, leaving behind a 3-year cycle low. Unless something changes very, very quickly, then it's only reasonable to expect continuation. So I said I would show you a worked example. I flipped the Dixie onto a weekly chart, and I have here all of the 3-year cycle lows marked, as you can see. If I scroll all the way back to around the end of the 1990s, what you will notice is we put in a 3-year cycle low for the Dixie around the end of October in 1998. And the dollar went on this big, big run from 92-ish to somewhere in the 121 region. Now you'll notice in blue here, I have a blue vertical line denoting March of 2000. And the reason I have denoted March 2000 on that Dixie chart is because when I pull up a NASDAQ chart, look what happened in March of 2000 right here. We had the peak of a blow-off top in the NASDAQ. For anyone unfamiliar, we had our first angle somewhere in this neighborhood, we had our second angle somewhere in this neighborhood, and then we set that third and final blow-off top angle before ultimately moving into this big deflationary bust. Again, if I hop back into this Dixie chart, you can see we made a 3-year cycle low, the dollar started to move at the same time as the NASDAQ put in that blow-off top. Okay, and then you know what happened thereafter. The NASDAQ rolls over from its peak and the dollar continues to be massively bid for some time. So I now reset this chart and pull it up at today. We may well have a 3-year cycle low in play. We may well have that first portion of the move, whilst, of course, the NASDAQ is possibly entertaining its first angle already set, its second angle possibly already set, and if indeed I am right about what happens next, then we should be looking for a third and final angle to come in, that parabolic blow off top that ultimately culminates in this deflationary bust, all against a backdrop of the dollar slowly but surely creeping up. We would perhaps expect, if this thing is to play out again, to see some kind of parabolic blow off top occur sometime around July and August. I'm open to moving that date back or forward a couple of months if need be, but I largely suspect somewhere in this neighborhood we will get that top come in, that third angle, as I said here, in the NASDAQ, break down, something like this. Okay, big push up, break down, and that right there, that breakdown, if I am right about this whole move, and if it is to repeat something like we saw in the late 90s, early 2000s, then we would probably expect the dollar to do something like this. And of course, all of this is very consistent with that melt up chart of mine. Okay, it's been written here the entire time. Dixie to 134 to 140 plus. For the people that have been following me for a long time, they know nobody wanted this 3-year cycle low to occur later in life. Nobody wanted to see that breakdown of the dollar more than me. Okay, this would have been way easier to deal with. This would have implied way less chance of a currency crisis. But when the charts speak, it is not about being right or wrong. It is about listening to the market. It is about being able to hold your hands up and say, this is probably not going to happen. I'm probably going to be wrong about this call to the mid-90s. I don't see how this happens. I can't even entertain this happening until we at least lose this upward sloping blue support. And all the while we continue to break out, all the while we continue to do this, then like I showed you with that late 90s example into the early 2000s, I think what we have is a very similar setup. I expect this dollar milkshake theory to continue to play out. I expect this perceived strength in the dollar to actually be a function of all the other currencies dying that death of 1,000 cuts. And if I am right about setting this third and final blow off top angle, then parabolas typically break to the downside. When they do, they typically break down spectacularly, and then I guess all of this pink text here is likely to start to come to fruition. So as always, I am open to being proven wrong. Okay, I am open to being proven wrong, but as I always say, okay, one day at a time. So far, so good. Now, if we start to roll over, okay, if we take out that cycle low that we just set back here, I will have to hold my hands up and say something else is at play. This is not a parabolic blow off top. But all the while we are holding these angles, okay? All the while we have set the first angle, we have set the second angle, all the while we continue to move up and potentially look to set a violent third near vertical blow off top angle. Then like I said, it is really difficult for me to get away from this being the base case scenario. Of course, for Bitcoin, we are still waiting to see if we can get a little bit more chop, a little bit more of this into this cycle low. And then if Bitcoin starts to do this as well, okay, I don't know how else to interpret that. We would have a Dixie continuing to run with a stock market in a blow off top and Bitcoin looking like it was in a heavily left translated cycle, all against the backdrop of people saying things when we get into this neighborhood like super cycle, $1 million Bitcoin, no more recessions, Fed's going to just keep printing, it's an election year, soft landing. All of these narratives will proliferate at the top. And of course, that is when euphoria, greed will be at its peak, and that is why, of course, we will be looking to see that extended bear market come in for both Bitcoin and the stock market, all against the backdrop of a massively bid dollar as the dollar slurps up the entire rest of the milkshake around the world. As always, we are coming out of the gate swinging on Monday, so welcome again to Monday, welcome again to the week, and let's keep going, because on Friday, as is typical for Fridays, banks only collapse on Fridays, of course, okay? The regulators have seized Republic First Bank Corp, which again points at the fact that there is obviously not enough banking reserves in the system. It's an easy fix for Jay Powell to just taper QT. Over time, this is dollar liquidity positive and should provide another bullish catalyst for crypto. I wonder if they're going to step in. I wonder if Bitcoin is going to sniff this out. I wonder if this ends up being the catalyst over the next couple of weeks. Dino here shared a very interesting and outside the box recession indicator that of course would be consistent with seeing a top come in the not too distant future. It would of course also be consistent with expecting that global recession, that deflationary bust at the hard right edge, assuming we can of course put in a parabolic blow off top first. And this outside the box recession indicator is known as the stripper index. So take a look at this.
We are going into a huge recession. Here's how I know. We just got our 1099s back to show you what a bad year at the Mustang Ranch looks like.
So there you have it for an outside the box, an outside the box recession indicator. But I guess when times get hard, right, you have to start putting your money in places that are more economically viable than strippers. I don't know. But I tell you what I did think was interesting as well, okay? Because this went completely counterintuitive to the way I think. I recently came across this, that during times of increased cost of living, what we see is gambling behavior massively increase. And I couldn't wrap my head around this at first, because in my mind, if I was struggling to put food on the table, the last thing I would do is be gambling money I didn't have to try to win a week's shopping. But apparently this is not how your average person thinks. Your average person has a tendency to gamble more and more the poorer they get. This article is over a year old, but you can see here the UK cost of living crisis is leading people to gambling. So this made me pull up a few gambling charts, which I'll flip through with you now, of some of the largest gambling companies. So you can see that at the hard right edge, this one is trending up. So is this one over the last 6 months. So is this one over the past year. And so is this one, particularly since around January of 2023. So these are some pretty outside the box indicators for a recession. Of course, I'm not suggesting that just based on these things, we are going to go and see a recession. Of course, if you're familiar with the work, you know that a lot more goes into coming up with this idea than just the stripper index and a couple of gambling company stocks trending up and to the right. But I do wonder if we will be able to look back at this in a few months' time and say, yeah, the writing was on the wall in multiple places, some inside the box and, of course, some outside the box. In the more short to medium term, tomorrow, a $230 billion Bitcoin ETF is going to launch in Hong Kong. So could this be a driver to see some upside price relief from Bitcoin? And it's not just China that are looking at raising an ETF, because thanks to Jay here who shared this with me, it's also Australia looking to get in on a Bitcoin ETF. And Kemazabi also pointed out that we may well have found a catalyst for our cycle low, which would be slightly early, but legal and qualifying, because on May 15th, investors with more than $100 million in assets under management have to file reports with the SEC called 13F filings, which discloses their publicly traded holdings. Those filings are due around 45 days after the end of the calendar quarter. Whilst they won't capture everyone, they are just a snapshot in time. It's likely that some of those names on the filings will surprise people to the upside. So imagine if it comes out that the likes of some sovereign wealth funds or even some nation states have been adding Bitcoin to their balance sheet via the spot ETFs. Of course, people are going to look at this and interpret it as bullish, and it just so happens to be right around that timing window where we should expect to see a cycle low for Bitcoin. So I wonder if this could act as a catalyst. In the meantime, not a great deal has changed, okay? We are currently something around 20 days away from that perfect 60-day cycle low. Remember, this could be plus or minus 6 days, and that would still be perfectly legal and qualifying. I do expect to see us find some kind of cycle low, and then out of there, it will be time to figure out for sure whether we are indeed in a blow-off top, a left-translated cycle, or if we do not come swinging out of here like this fractal suggests, okay? If we do something more like this, something more lackluster, more base building, or even a failed cycle that then trends down, then we can breathe a sigh of relief and say a left-translated cycle is probably off the table. It would be highly unlikely that we do something like this for another 60-day cycle and then move into a left-translated cycle. So I really think that we're going to get our answer. It's been a very, very long time coming, but we're right around here now, right? If I am right about this blow-off top, if I'm right about this left-translated cycle, we should come out of here swinging. The same as if I'm right about the blow-off top in the stock market, we should be continuing much higher and at a much more accelerated rate. All of this, of course, against a backdrop of likely a stronger dollar, or at least a perceived stronger dollar. Of course, we'll likely be able to look back at this time and say, well, that kind of made sense that gold was breaking out. Gold always knows something. Gold probably knows that a recession is not too far away. So what a wild time to be alive. Again, welcome to the week. Welcome to Monday. The countdown I'll put in the thumbnail for Bitcoin, I'm going to say 20 days, but if it shows up a few days either side, cut me some slack. Other than that, like I said, probably going to be a big week for the stock market. We're going to find out if we break out, okay? We're not out of the woods yet. Reject a resistance and roll over, lose this trend line. Something else is going on under the hood, but get a breakout on a weekly closing basis this week above this downward sloping blue resistance line, and I think it is party time. I think it is go time. Same deal for the NASDAQ. Something like this yellow squiggle suggests, and happy days, but we are still susceptible to a rejection at resistance and a breakdown. And if that happens, then that will tell us something else is going on under the hood. Dow Jones possibly set its second angle, looking to resume higher. Okay, any kind of close up in this neighborhood for the end of the week, and we can say with a high degree of confidence that that is the second angle set. And again, it should be party time in the not too distant future. So what a wild time to be alive. And as promised, hopefully somewhere in the middle of this video, there should be a big clickable link to Creative Precious Metals channel. You can go there, watch the 2 Swigs and Sigs podcast. And we took it to some strange places, but I think you're going to like it. I think you're certainly going to enjoy some of the more outside the box conversations. So other than that, have a great week. And until next time, take care from me. All the best. Cheers. Bye.